So if we are ready to go, let's start here.
Hey, Sasan, thank you. Alex Zukin with Wolfe Research. I'll first give a compliment. Some 3-hour analyst days feel like 6. This one felt like 1, so just a great job all around. I counted a few unicorns and a few centaurs based on the companies and the products that you guys demoed. The main question we get is your level of confidence, the inspiring financial metrics, product metrics, on the backdrop of an impending, at least highly volatile macro environment, if not a meaningful recessionary environment. And there's, I would say, the burden of proof is on you to prove the resiliency and the durability of the business model through that time. But what gives you that conviction? Because at least in the initial investor conversations that we've had, it feels like the guidance for fiscal 23, the momentum that you had out of fiscal 22, probably sets up at least a tougher comparable than in the prior year. What gives you that conviction, particularly around the Credit Karma and MailChimp side, which could have more, let's call it, headwinds on at least earnings growth in fiscal 23, and then subsequent to that, because every analyst loves multi-part questions. The capital allocation strategy, and particularly, basically the two questions we ask everybody is macro and M&A.
Yeah.
So your approach as we enter this more volatile environment with hopefully, less unicorns and more centaurs, how you approach M&A would be through this would be super helpful.
Yeah, awesome, Alex. Thank you for the question. By the way, we've been getting this question a lot since earnings, so I appreciate you asking it. Let me just maybe say a couple of things and just expose all of you to our process. First and foremost, we take guidance very seriously. We are very rigorous, very disciplined, and very intentional in how we set guidance. And we don't just take the current trends and roll them forward and hope for the best. So here's what we do. One, first and foremost, the way we run the company, we do a bottoms-up forecast. We look at all of our KPIs on an ongoing basis, and that really informs how we think about guidance. It's very much detail-oriented and bottoms up. So that's sort of number one. The second thing I would say is just more of a reminder of what we talked about at earnings, which is 35% of the company is tax. It's consumer tax and pro tax. And great times, bad times, that 35% is about as bulletproof as it gets, and high margin. The second is 51% of the company is small business. And out of that 51%, 80% of that 51% is subscription-based. And MailChimp actually added to that 80%, which means the other 20% is transactional-based, right? Payments, payroll, those types of things, time tracking. We take that into account when we think about guidance. Good times or bad times, we take that into account. And then last but not least is Credit Karma, which is 14% of the company. In Credit Karma, demand is great in good times. It gets even better in bad times. It's actually as predictable, if not more, than tax, because consumers take out more than 1.5 financial products every single year. So demand is very predictable. In a macro environment, the supply side is the tough part. And it is out of our 100% of revenue, that 14% is the most volatile in macroeconomic times. And so in that context, we take all of that into account when we think about guidance. And let me just double click on Credit Karma, because I know that's on a lot of your minds. We expect, first of all, let me start with a broader point. Almost all the verticals that we serve in Credit Karma have been impacted by the current environment, credit cards to a lesser extent. We actually expect personal loans to decline year over year. We've included that in our guidance. We actually believe that Credit Karma will grow single digits in the first half of the year. The second half of the year is where the acceleration will come in. And the acceleration has nothing to do with the macro environment. It's all the innovation that you heard about. Karma Guarantee, Karma Drive, the integration with TurboTax. And that's what informed the 10 to 15% guidance that we gave on Credit Karma. If I pull back the nose of the plane and sort of zoom out, I'll end with where I started, which is we take our commitments very seriously on guidance, whether it's good times or bad times. 2, bottoms-up forecast, KPI-driven, data-driven. And then the second is 35% of the company is tax, 51% is small business, majority of it subscription-based. So the majority of the company is high reoccurring, predictable, subscription-based business. So that's the way we thought about the sort of the macro environment and how that informed guidance. Last thing that I'll say, and then you had an M&A question, is reminding everyone what we see. So we see consumer spending. We see the number of employees that our small businesses have hired. We actually see hours worked by employees. We see delinquency rates. So there's a lot of data that we see that informs how we run the company, again, in good or bad times, which actually allows us to play offense while making sure we deliver on our commitments to all of you. That was the answer to the first question. The second question around M&A, listen, our philosophy does not change in good or bad times. For us, it's all about, is there something that we see in the marketplace that accelerates our time to market? It could be a tech tuck-in, like Aplatix that we acquired, I think 18 months ago. It could be access to omni-channel capabilities like TradeGetco that we acquired several years ago. Or it could be a company that comes with full capabilities that accelerates our vision around our big bets, Credit Karma and MailChimp. But when we look at an environment like this, we don't become hungrier because valuations are down, because acquisitions are very important decisions for us. Acquisitions are hard to make work, which is why we do our due diligence up front around being a strategic fit and a cultural fit. So our principles don't change. Well, many of you are going to be mad at me because I don't know who to go to next, but here we go.
Thanks very much. Brad Zelnick with Deutsche Bank. Really great to see you and everybody else in person today. Sasan, I wanted to ask about B2B payments, where in one of the breakouts, I saw a very compelling demo of the QuickBooks Business Network. And yet, at the same time, which I believe is in beta, but at the same time, if we looked at your presentation where you showed the different innovation investment horizons, you had B2B payments at Horizon 3, which was, I think, 36 months or so out. Can you bring those together in helping us to understand the vision, strategy, and interoperability with other parties? How open is this, and ultimately the monetization strategy for B2B payments?
Yeah, absolutely, and maybe I'll tag team this with Alex. First and foremost, we view managing money in and money out for small businesses as a very strategic part of the ecosystem because it is all about cash flow. We've spent 7 years, as you heard from Mariana, building out the infrastructure across the entire stack, in this case, money movement. And now that's allowing us to accelerate our innovation. We didn't come up with this B2B network opportunity or automating all accounts payable overnight. These have been opportunities for years. We now have the capability to accelerate the innovation. And so as you said, B2B is in beta. But we're also very intentional about what we share with you about innovations. And then, as I mentioned earlier, our say-do and our commitment to you matters a lot. We are framing that as a Horizon 3 idea to communicate to you, hey, we believe that will deliver material customer and revenue growth in the out years. And oh, by the way, we don't count on that as we think about FY23 guidance. So don't confuse where we share it with you on the Horizon framework as a lack of urgency. This is an area where we have incredible urgency because it's important to our customers. We have a massive network of customers in our business, and they're not getting paid for their money. And we're now digitizing and automating all of that. We have almost $800 billion of bill pay that's recorded in QuickBooks. We have an opportunity to help all of those customers. And so we are moving very rapidly with the innovation and thinking about how do we have breakthrough adoption and then monetization, which we'll reveal at the right time. Don't confuse that with where it sits on the Horizon framework. That's really more our commitment to you. Don't count on that. We're not counting on it in terms of our guidance, but it's a massive opportunity, and we view it as something that we're very urgent about. Alex, where is Alex? There he is. Would you add anything?
The only thing that I would add is, let me expose you a little bit to how we think about sequencing and how we think about roadmaps. So you've heard from us for a number of years just the massive opportunity we have in invoices, right? 400 million invoices being recorded inside of QuickBooks. We had to start with what was most simple. All of those, or many of those, are being paid via check. You've seen the investment that we've made and the penetration with the results of being able to digitize those invoices and make them payment enabled. And we're enabling that and feel very good about the capabilities we've built there. B2B requires a different level of capabilities. We have the core money movement capabilities, but the real need for B2B payments is when you start to move into the mid-market, where now you're not just paying, as I said on stage, a few payments every month, but you're now paying dozens. Well, in a mid-market company, you have multiple users that now need access to QuickBooks. 2-3 years ago, QuickBooks was a one-user product. Once we moved into the mid-market, we had to add more users. We had to add the capabilities that Mariana talked about earlier in terms of roles and permissions. Now QuickBooks with QBO Advanced is a multi-user product. That now allows us to go into B2B payments in a much more effective way. So we've been very intentional about the sequencing of how we think about tapping into the full $2 trillion opportunity that is payments inside of QuickBooks. And I think you'll now see us accelerate as we start to bring those together.
Great. Thank you, Alex. Yes. Oh, Mike over here. Sorry.
Marcy.
Great, thanks so much for a wonderful Analyst Day. Learned a lot here. Maybe one on TurboTax. You know, we think of TurboTax, this is Brad Sills from BofA Securities. We think of TurboTax as a do-it-yourself brand. It's a consumer product, so brand matters. You're making the leap towards TT Live and TT Full Service now. I assume you feel like you have that CPA talent pool in there to be able to go after those kinds of use cases. How do you drive awareness? What is the hurdle to get those 68 million filers that are using Assisted that are interested in digital to kind of make that leap with TurboTax Full Service?
Yeah, thank you for the question. And in fact, you know, this is a 4-year journey that we have been on, and that 4-year journey has been filled with tons of learnings. I mean, what we talk to you about is it's a $1 billion business growing 30%, which we're very proud of. We're actually more proud of all the things we've learned, all the things that haven't gone well, which informs what we need to go do. And then, as you heard Varun talk about, based on what we learned in the last year, we are completely revamping our go-to-market in terms of how we raise awareness. Customers are aware of the fact that they can get expert help. However, what they don't understand is how's that going to work. I am used to going into somebody's home, office, store to just hand over everything and get my taxes done. I may not love that experience. In some cases, I may. But what does that mean that I can get expert help on a platform? And so we've learned a lot in terms of what has not worked, in terms of our ability to raise consideration and not just awareness. And then, and these are coupled, once they get into the platform, how do we deliver on that promise right away? I mean, if you recall what Varun talked about earlier, you know, we have 3 million customers that make it all the way to the end that actually never file with TurboTax. We have 17 million people that come top of the funnel, and they have great intent, but they don't engage. And so what we are working on is revamping our go-to-market to raise consideration. And by the way, you're going to see a number of new innovations. Varun touched on a few of them, so that when customers do come in and they need live expertise, how we deliver that benefit, and then the speed of that benefit, and then ultimately access to that refund instantly. All of those things we're revamping from what we've learned in the last year. And I'll just remind us, you know, it's a $30 billion TAM opportunity. 21 billion is consumer, 10 billion that we're now opening up this year with our launch of business tax, and we're a $1 billion business growing at 30% in TurboTax Live. So the biggest opportunities, the biggest learnings are still ahead of us. Wow, this is really hard. I'm going to go here, just to spread the love in the room.
Thanks, Sasan. Brent Thill with Jefferies. Let's assume the macro gets worse. Can you just talk to the insulation features that you feel good with that are protecting that 14 to 16% growth?
Yeah, absolutely. Well, first of all, the most straightforward one is tax. 35% of the company is tax, and people are going to do their taxes. And we don't make a lot of macro assumptions that are unreasonable around all of a sudden this year, you're going to have a lot more tax filers. And so that 35%, I don't want to downplay it. We work hard for that 35%, but it's sort of check. The second is small business, which is 51% of the company, and 80% of it is subscription. And if you really think about it, I know we threw a lot at you today in terms of our innovations and the immersion experiences, but if you really think about what small businesses use us for, whether it's QuickBooks and or MailChimp and or the services, they're using us to run their business. We are not a line item on their budget. We are not a line item where they go, you know what, I need to spend less, so let me cross this line item out, because if you cross out the line item, you can't run your business. They're running their business on our platform. So really that 80%, right, is pretty rock solid. And if you look over the years at our retention rate, it's hovered around 80%. And 10% of that 20% gap is businesses that go out of business. So our retention rate is 90% in sort of good or bad times. So that 80% is pretty rock solid. The 20% could be impacted, not all of it, a portion of it, because consumers may spend less money. So our payments charge volume may go down. You may have less workers or hours paid. That could impact payroll. We take all of that into account. And I would just remind you, although I don't want you to think that we count on this when we think about our guidance, our penetration is very low. Even if consumers spend less money, we have 2 trillion invoices that are managed on our platform. And so we have an enormous opportunity just to penetrate the invoices that are on our platform, whether or not consumers spend less money. We don't count on that when we think about guidance, but that's the piece that could be impacted. And then if I move on to Credit Karma, as I shared earlier, all the elements, recession is a technical word, but by all counts, we're seeing the impact on the Credit Karma platform because almost all the verticals, other than to a lesser extent, Credit Karma is being impacted. So we've thought about that. We've assumed that personal loans is going to be down significantly, as an example. We've assumed the first half of the year is going to be sort of mid-single-digit growth because a lot of our innovation, not the macro environment, is the second half of the year. And then holistically, we take all of that into account as we think about our guidance. So may be more detailed than you're looking for, but we're very intentional in terms of how we play the long game, the innovation that we're expecting, and then how do we think about our commitments to you in good times or bad times.
And just a quick follow-up on MailChimp.
You're going to have to pay me $5 for this one because this is a second question now. I'm just kidding.
Just when you think about, I know you're only 9 months in, but when you think about going back to the Intuit install base, as a family that is running their business on Intuit at our family, we're not getting any emails about MailChimp yet. When can you go full force and really get back into that install base? Are we a few months out? Are we a year out? How do you think about the time?
It's a wonderful question. It depends on which cohort that you fall into. We're just very intentional to make sure that we actually have the product and the benefit ready. So if we email you and say, hey, you use QuickBooks, you don't use MailChimp, we can help you accelerate marketing your business, and now based on the data that we've integrated, we can give you insights, we need to be ready to do that. And so you saw Rania talk a lot about how we're already leveraging the data across the platforms to accelerate innovations. We want to be very intentional that when we start engaging our customers that we can deliver on that promise. So some of it, depending on the cohort of customers, could be 3-4 months away. Some of it could be a year away. But we don't want to let you down. And this is a playbook we used in mid-market with QuickBooks Advanced. We started engaging our existing customers when we felt like QuickBooks Advanced was ready so we could deliver on the promise. And it's just really the same playbook here.
Thanks. Kirk Materne with Evercore. Sasan, can you just talk about the global opportunity and how MailChimp is maybe helping you all be more prescriptive about where you can go to find product market fit? I think if we look back, maybe 5 or 6 years ago, you guys were able to go sort of test some markets, some worked, some didn't. Given that sort of customer outreach is sort of global in nature, whereas accounting might be very different by region, does MailChimp help you find that product market fit perhaps faster or more effectively? And how should we think about that sort of coming out in your results from a global perspective? Thanks.
Yeah, great. Thank you for the question. I'll tag the team this with Alex as well. First of all, let me just touch on a bit of what Alex talked about earlier. I think it's been 8 months ago now, we kicked off a strategy project that was led by Alex, Anton, and Mariana, where they, in essence, objectively, we looked at what's working, what's not, and how do we accelerate growth. And the biggest elements that came out of this, because we now have new assets, is 50% of MailChimp's customers and revenue comes from outside of the US, and other than a very drop-dead, easy-to-use platform, they haven't done much to really amplify international. The other thing that came out of it is the conversion and the growth in English-speaking countries is far better than countries where we don't have the localized language. And so that's an element of this strategy, but really what the strategy led to is we're going to double down leading internationally with MailChimp. And in countries where we have product market fit, Canada, UK, and Australia, it'll be the integration of QuickBooks and MailChimp. And where we get significant traction with MailChimp, we're going to then bring our open platform with one QuickBooks platform across the globe. And we won't make it compliant in that country, but bring the power of managing your cash flow based on what QuickBooks has to offer without having to make it compliant. That is really the essence of the strategy, with MailChimp being the lead. It's the biggest opportunity. And that's at a high level. Maybe, Alex, if I could ask you to add your perspective.
What I would add is, as we went through that strategy project, you all know we've been investing significantly in international growth for a number of years now. One of the things that we learned just in bringing our QuickBooks ecosystem to different markets is every market is different. You've got compliance challenges, you've got go-to-market challenges. In some markets are heavily assisted, where the accountant is the recommender. Some are completely DIY. So you really do need to be on the ground in the market, understanding the nuances. Government is moving very quickly. You've got a very aggressive making taxes digital in the UK, while you've got other governments that are still trying to figure out what they want to do in terms of tax filing and digitizing bookkeeping and taxes for small businesses. So every market required a significant investment. Turn to MailChimp, we now have a low compliance. There's almost no compliance to get into the market. It is not an ecosystem that is required to be built before you get to market. It is something that is universally understood, helping your customers grow customers. It's the #1 problem that small businesses are facing, and it's an opportunity for us to lead. So just, the word that I used in my presentation was a focus of our investments. This is an opportunity for us to deliver our mission of powering prosperity around the world, but focus our investments, and we're very excited about leading with MailChimp.
Yes. Can you keep your hands up for a minute while you ask the question, just so I can see where the questions are? Okay, great. Thank you.
Thanks. Ray Molincho from Barclays. Sasan, if you think about software companies or technology companies when they grew, when M&A comes in, at some point there's tech debt, because you kind of have different platforms that need to kind of bring together. If I looked at your product platform earlier, it was super impressive how they all fitted together. Like, how do we make sure that MailChimp, et cetera, in terms of their assets, the technology, kind of comes together? Because I do seem to remember they sit on Google, you're on an AWS shop. Like, how do you make sure that in the long run they all kind of still work together and you get the benefits from AI, et cetera, with the data sitting in different places, et cetera?
Great, thank you. I'm going to tag team this with Mariana. First and foremost, let me just start with the due diligence process. One of the things we get blamed for often in due diligence is we take too much time. Ken can vouch for that. But I start there because we spend a lot of time really assessing, besides cultural and strategic fit, which matters a lot, we assess the technology platform, the architecture. So that's #1, is we get real insights in the due diligence process. And in fact, Mariana has a huge veto vote. If at the end of the day, Mariana says, the technology is no good, we can't accelerate it, it is something that we will walk away from. Because at the end of the day, we're a platform company. And if we have to redo the entire platform, it's certainly going to slow us down. Which gets to the second point. We spend an incredible amount of time with actually the company that we're thinking about to write a vision, priority, and execution paper in terms of what we're going to do, but it's all in service of acceleration. And I think you heard Mariana talk about this, which is we focus on acceleration of the customer benefit, not integration of the code. Now that sounds great. The question is, well, how do you do that? And that's where I'd love to turn it over to Mariana. Maybe Mariana, you can think about using Credit Karma and MailChimp as an example of what you've led us through.
Yes, so indeed, when we look at how our products working together, we look at acceleration, and when we do that, It's just important to emphasize that we don't look for like point-to-point integration, but actually things that are architecturally sound and durable, and like create a framework. Like for example, I talked about a data bridge. So we're not when we need to move the first data, we're not saying, oh, let's just connect these two data parts, but actually say, let's do it in a way that when we have to bring more data and more data, we have the foundation to do that. So that's kind of when we look at how we accelerate. The second thing that I would like to say is that there's, the minute any company, any software company finishes writing, a line of code, it's already obsolete because like technology is always like moving fast. So this is something we take into account in everything that we do, including with our acquisitions, is how do we constantly make sure that we devote enough time for technical debt and we don't accumulate much of it. So there's a kind of part of how we work, and the same we apply for acquisitions as well. So.
Awesome. And the three examples, if you recall, that Mariana used earlier is the data bridge between Credit Karma and TurboTax, where we moved billions of data points. And we're doing the same thing now with MailChimp. The account linking, where you didn't have to get everybody on the same identity system, but we linked the accounts. That's all technical innovation, and that's really the strategy that we use.
Thanks, Sasan. Scott Schneeber with Oppenheimer. Great job today. My question is going to be business tax. It's an exciting opportunity. We saw just 4 or 5 years ago TurboTax Live, a little bit larger TAM, but this is a very large TAM as well. And you obviously put up a lot of impressive financial results quickly. So what type of time horizon are we looking at to get some financial contribution via business tax? Maybe some barriers you're facing, certainly the strength of the positioning you feel you have entering the market, and then getting way ahead of things. What type of margin profile do you perceive that ultimately? Thanks.
Yep, great question. And if I don't get to all the elements, holler at me and I'll get to the parts that I missed. First and foremost, we've been talking about business tax for probably 10 plus years, just like we've been talking about the business to business payments opportunity for probably 10 plus years. It comes down to capability. We now have all of the capabilities. I think you may have recall Lance talked in the immersion experience that it took us several years to come up with all the capabilities with TurboTax Live. We launched business tax within months. So first and foremost, I would just say we have the capabilities. On the platform, we have the expert capabilities. Now it's about the go-to-market with the product. The second thing I would just say is, although we focused on TurboTax, solving the business tax problem spans across both QuickBooks Live and TurboTax Live, because this is about the point of where the customer is. If they want us to help them to get their business taxes done, and it's a customer we're already helping with QuickBooks Live, we'll also help them with business tax. We focused on TurboTax Live, but I want you all to take away that we look at this as a problem that we can solve across the platform. Last but not least is the reason we put it, and this is, as I mentioned earlier, we try to be intentional about how we manage ideas and pipelines across our horizon. We ensure that we invest in them the right way, but it also helps us with where can we count on customer and revenue growth in the near term and medium term, and where are teams where we just need to let them, leave them alone so they can ideate and be able to move quickly. And so the reason we put it out in the out years, business tax, is because the indication we want you to have is we're very serious about this opportunity. We have the capabilities, and we've launched business tax. But we don't want you to count on it in terms of our growth in our guidance. And just like TurboTax Live, we're going to move as fast as we can to take advantage of the opportunity in business tax. And you asked what the challenges are. I don't want to suggest the challenges are exactly the same as delivering for consumers, but in many ways they are. Our challenge isn't actually getting experts. What Mark Nortriani and the team have done is they've really built out a modern operations where we have the platform, we have the access to experts, and they love our platform because it's technology-led, and they don't have to hunt for customers. The customers come to them because they're on our platform. It's just really finding a product market fit of how to solve this business tax problem, which is why we believe it's an opportunity 3 to 5 years out. But we're going to move as aggressively as we can to serve these customers, because they're our customers. They're on our platform. It's actually solving a very important problem for them. So that's how we think about the balancing of the short and the long. And I think you asked about margin profile. Just let me hit on that. I don't know if we've disclosed this before, but here I go. I'm going to disclose it now because we're on a webcast, which is our variable margins with live, in some cases, actually better than TTO. And so we don't have a margin challenge when we think about our live platform because it's technology-led, not human-led. Yes.
Brad Reback with Stifel. Thanks, Sasan. Look, there's no shortage of investment opportunities, as you guys have laid out today, that I'm sure far in excess of your 15% 5-year goal. How do you coordinate and figure out which is the best to invest in while still growing the margin?
And do you mean our future ideas that we're investing in?
Yes.
Yeah, got it. Great question. We let the data speak for itself, but let me just expand on that for a moment. Anytime we are, it depends on the size of the opportunity, but anytime we're exploring an opportunity, we actually have multiple iterations of a vision document to understand and explore, is this a problem that's big enough? Can we solve it well? And can we build advantage? And what's the ideal experience? And can we solve it in a time frame that makes sense for the markets that we serve? So we spend a lot of time sort of iterating on, is this something we want to go after, depending on the size of the opportunity. And then we put a single-threaded leader on the idea, and then we put a small, first, mission-based team on it, which can expand over time depending on the progress that we make. And it's also why we're very intentional about putting new big ideas as a Horizon 3 or beyond. And what we always say is opinions, anybody has a good idea, your opinion doesn't matter, the data matters. And so we do a lot of experimentation and testing to actually understand, is it solving the problem that our customers want solved? And the data always tells you the truth. And that really informs what pivots we need to make, not whether or not we kill the idea. So that's the approach that we use. Yes, and I'll come back to you.
Thanks. Hi, thanks. Michael Turn with Wells Fargo Securities. I just wanted to follow up on a few of the things that you've mentioned there and earlier on the live technology and the extensibility. I think there was a comment early on just around using the expert network to help small businesses grow. And that's obviously got TurboTax Live as a $1 billion business. You've seamlessly moved into QuickBooks Live. How do you prioritize and think through the extensibility? And then coupling that with the margin comment, was getting to scale an important part of getting to what you're saying now around TurboTax Live margins relative to the core? Just help us understand how you strike the right balance given the breadth of the opportunities that you're going after here.
Yep. Let me just start with the margin question and the scale question, and I'll just use TurboTax Live as an example. We are very much technology-led as we are trying to solve this problem. We are not human-led. And beyond, if you're human-led, beyond having margin challenges, you actually can't solve the problem well because you have so much variability in humans. And so therefore, because of our application of leveraging the data, our machine learning and knowledge engineering capabilities that we've built, we are able to do a lot of the work and automate a lot of the data gathering, automate a lot of how the data then is used on the digital platform to do a lot of the work. And then based on all of our AI capabilities, we make the experts much more valuable so they can only engage when needed. And so, of course, scale matters, but if you look at from the time we launched TurboTax Live, and where it is now at $1 billion, and then you look at our margins across that time frame, you didn't see an impact on our margins. So of course, scale always matters because you become more efficient and effective. But the real thrust of it is really the partnership between Mariana and Mark that runs our customer success and the fact that this is all technology-led. And we've now proven that to ourselves. And so therefore, we have a lot of confidence what we're going to do with QuickBooks Live and beyond, that it's actually really about solving the customer problem and getting the product market fit. We truly don't. We think about margins, but we're not worried. This is not a margin problem. It's solving the problem well. And I think the second element of your question is, in order to connect people to experts and have a virtual expert platform, you first have to have a digital platform. So we have QuickBooks, we have TurboTax, we now have MailChimp, and we have Credit Karma. And we already know that a certain cohort of customers need a lot of help that are trying to grow their business. They want access to experts. On the Credit Karma platform, we have an enormous opportunity to disrupt the mortgage experience and process, leveraging data and experts. So you can see us, as we now have the capabilities to sort of go vertical by vertical, to be able to capture the opportunity. And that's the approach that we use. Yes, and then I'll come to you. And then if you can give it to Cash up here next, please go ahead.
Great. Thanks, Jackson Ader at MoffettNathanson. Couple questions, but both on tax. Can you tell us, maybe remind us, in previous downturns when some consumers get a little bit more price sensitive, maybe want to level down their TurboTax SKU, what was the playbook to kind of maintain that revenue per return? And then, and how does it change now that we have live and full service that are higher priced? And then the follow-up is, I'd just like to get your take on the Irs Viability Study, that $15 million talking about whether they can do it themselves or not.
Yep, sure. Let me take them in the order that you asked. I would just say that when you look at history and where you look at where we are now, consumers, especially those that use an assisted experience, they don't actually think about the price, and frankly, 90% of them don't even know what the price is going to be till they're about to pay it. Their focus is on confidence. And are my taxes being done right, and am I getting the maximum refund, or if I owe money, am I in a place to pay the lease? So there is very little to no price sensitivity in downturns, and what's very different today than even 5 to 10 years ago is free is available to all consumers. So those that were price sensitive and they want to use free, they already are. And so this is not an area that, based on history and data, and now based on where we are today and our opportunity for growth is really the assisted segment, for us, there's really no impact. To your second question around the $15 million that has been granted to the IRS to do a study of whether or not consumers are open to the IRS also creating a tax software. This is not the first time the study has been summoned. It won't be the last time. This was a study that was summoned years ago, and the unanimous view that came out of the research was that consumers absolutely don't want the government to have anything to do with their taxes, to be in the tax software business. They want the government to actually focus on the experience of taking care of them and getting their money to them as fast as possible. So that was the result of the last study. And there'll be a study now, and I'm sure there's going to be a study 5 years from now and 10 years from now. So that's sort of number one. Number two, what I would say is free is available to all Americans. Every assisted customer, those 88 million, if they want, they can get their taxes done for free. But the reality is they choose not to because they want assistance in how their taxes gets done. And so if the IRS actually does make a software that's free, it's yet another free software. And among many other free softwares that are already in the marketplace. So this is not something that we think about it as an impact at all in our business.
Hi. Thank you, Kash Rangan with Goldman Sachs. Sasan, I don't have any questions for you because we spent a lot of time a couple of weeks back. However, first of all, congrats to Kim and Jeff on putting up a fantastic analyst day. However, my friends Keith Weiss and Mark Murphy are really dead curious about the retention rates in TurboTax and self-employed. It's 80%. It's come up quite a bit in the last several years. With your AI, data-driven approach, what are the things that you've uncovered that you could fill the gap to a greater degree? And the second one is actually my question. What share of payments can you get? Is it like 50, 60, 70? You're modestly low, but where could you go?
Yeah, absolutely. Great questions. Let me start with tax, and if you don't mind, I'll hit on QuickBooks as well, because both retention rates matter. We are actually sort of in world-class range in retention, and our biggest growth opportunity is not going to come from increasing retention and other pointed to. Don't get me wrong, retaining every customer is important because we want to earn their business. But if you look historically in the past years, and you look at where we are now, TurboTax retention has been around the 80%. In fact, it's been in the high 70s range. And our loyal veterans that have been with us for a long time, retention rate, which we typically don't disclose, is much, much higher. So we'll always work hard to keep every customer. And we believe, by the way, with TurboTax Live, we can over time because now we have an expert to help those that leave because of confidence. But we're at world-class rates. And I would say the same exact thing for QuickBooks. QuickBooks has traditionally been in the 80% retention rate. And if you look at those 20 points, 10 points of it is customers that go out of business. So our retention rate is 90% in QuickBooks. And so again, we want to work hard to earn the business of every customer, but retention is not the biggest growth driver, although we care deeply about it. In terms of your question around sort of payments opportunity, listen, so what is the opportunity? Just as a reminder, there are 2 trillion invoices that are $2 trillion of invoices that are managed on our platform. There are about 800 billion bill pays that are actually bills that are paid that are recorded on QuickBooks. That's above and beyond the 2 trillion. And listen, we believe every one of these should be digitized. Why? Because it actually drives the livelihood of small businesses because they normally have to wait 60 plus days, sometimes 75 plus days to get paid. So our goal is all of it should be digitized, all of it. When we'll get to that point, I don't know. We have not set a threshold of, well, we want to get to 50% because we believe it should be 100%. And I think just what you should look at to hold us accountable for is the metrics that Alex and Michelle talked about today, which is our overall volume, charge volume in payments has grown 36% this past year, and about 5 years ago it was growing, or 6 years ago it was growing at 11%. And so large TAM, it's happening on our platform. We don't have to go get it. It's on our platform, and all of our innovation is starting to result in charge volume growth. And hopefully one day I can stand in front of you when I'm, 120 years old and say we have it all. Yes, and I'll come to you.
Siti Panigray from Mizuho. Excellent presentation and great job by Kim and Tim Iyer. So we've been getting questions about MailChimp that I want to drill a little bit into that. It's been now part of 10 months, and recently Rania taking over as CEO as well. Help us understand last 10 months, what are the progress? Like we saw, it's still 800,000 paid customer base. So how MailChimp being part of Intuit, you are going to help in the go-to-market. What was their go-to-market strategy, and how are you going to extend that? And also recently you pulled marketing spend. You said, when do we think that it'll be back again?
Yeah, got it. Great question. I'll say 3 things, and Alex, let's tag team on this. I always get accused, by the way, of answering all the questions too much and not handing it over to my team. So this will give me brownie points. Alex, be ready. The first thing is we're playing offense. MailChimp was run for profitability, which is one of the many things we loved about MailChimp. It wasn't run for growth. And so that may seem subtle, but there's an entirely different playbook to play offense and be in a place where you want to win customers, drive growth, versus a run for profitability. So that's first and foremost, which includes changes in leadership. It's not just money, it's the playbook. So that's number one, the changes that we've been putting in place in the last 9 months. And we're actually very confident we're going to see the results of that over time. The second thing is the priorities you heard Alex talk about. We are focused on 3 things, and you saw exposure to one of them when Rania was going through the immersion experience. One is we are working on creating one growth platform, and what that means is we're building all the data bridges behind the scenes so that we can leverage the customer data and the purchase data in one place so we can deliver real insights for customers. 2, we're taking that game to mid-market. And then third is it is actually the primary strategy in international is to double down MailChimp. So those 3 priorities are very consistent with what we talked about 9 months ago when we announced the acquisition. And we love the progress that we are making. And when we talked about on earnings that we've pulled back on marketing, it's more because of the opportunity that we saw and the acceleration that we saw versus that there is a conversion problem. And in fact, we have already kicked up our marketing. You've probably seen MailChimp, new campaigns, both on air and digitally. And so we've already revamped our go-to-market approach. And just we're excited about the months and year ahead. Yes.
Thank you. Mark Murphy with JP Morgan. Thank you, Cash, for asking my first question. Never seen that done before. Great job kind of reading my mind. I'm wondering, for how long do you see Credit Karma kind of growing below the longer-term target of 20 to 25%? And are you saying it's only a first-half phenomenon and then we're back there? And what are the ingredients? Pardon?
Sorry, what was your question? How long we expect Credit Karma to grow below what?
The long-term target of 20 to 25.
Got it. So first of all, let me reiterate what you just said, which is our long-term growth prospects for Credit Karma is that it will grow between 20 to 25%. That is absolutely unchanged. The second is we're just being very prudent given the impact in the business and the macro environment to be very clear about the guidance that we have provided. So I don't want to sit here and predict when it will get to the long-term growth guidance of 20 to 25%. Just know that it will, and for this year, our guidance is 10 to 15% for the year, and it's lower in the first half, given the reasons that I mentioned earlier. Yes. Did I answer your whole question, by the way? Okay, great.
Awesome. Matt Wilson from Morgan Stanley. Thank you for taking our questions. On QuickBooks and the traction up market, how do you think about the investment priorities over the next year in the go-to-market in terms of the channel, verticalization, and then secondly, long-term traction up market? How do you think about serving customers over 100 employees, and how does Intuit view that opportunity?
I will tag team this with Alex, and let me just start with maybe one snippet, and I will turn it over to Alex, and that is, as you heard us talk about today, we see a massive opportunity between 10 to 100 employees. And the 100 employees is, it's a gray line marker that we drew. It's not a sort of a hard line because a small business can have a lot of revenue and very few employees, or they can have very small revenue and a lot of employees. So the 100 employees is sort of a gray line for us in terms of how we think about the opportunity. And as you heard Dan talk about it in the platform immersion, the way we are building out the platform capabilities, the partner capabilities, is actually scalable beyond 100 employees. We just have so much opportunity within the lines of 10 to 100 that we really want to nail that. We're not going to be overly sequential about it. When we feel like we're ready to go beyond 100 employees, we absolutely will. But it's just, again, as always, it's strategic sequencing to make sure that we can really capture the opportunity for the segment that we want to serve today. Alex, what would you add?
Yeah, what I would add is, if you think about what's made the QuickBooks franchise incredibly successful and to scale to millions and millions of customers over the last 20 plus years, is we were a direct to small business product, right? Most of our customers would either buy in retail or more recently, they would buy online. And it was very low touch. We built an attach service, which allowed us to create in-product discovery points and attach payroll and payments. But for the most part, our customers would come in. It was a single owner of the business that would buy the product and then attach. As we now move up into the mid-market, we're now rebuilding our go-to-market capabilities to serve different buyers, to serve multiple pieces of the ecosystem. The person that's buying bill pay is sometimes very different than the person buying financial management software. This is a considered purchase because the ARPC is so significantly higher than just QuickBooks. So we will continue to grow with them, and they may need an account manager. So we're building all of that infrastructure now, including testing our way into channel. Channels and VARs and system integrators are a significant part of the mid-market, as well as our accountant ecosystem. And so our go-to-market motions need to continue to change with them. The good news is, as I said earlier, we already have 700,000 of these customers inside of our ecosystem today using a QuickBooks SKU. So this is about reaching out to our existing customers and having those different conversations about bringing our whole ecosystem, having a business consultative conversation, and being able to make sure that they're in the right product and consuming as much of our ecosystem as fits their needs.
Awesome, thank you. I think we'll be able to take one or two more questions. Yes.
Excuse me. Hey, Sasan, you've talked about obviously this business opportunity for small businesses or the tax opportunity for small businesses. Do you see any conflict of interest because of that? And what's the brand name you'll go to market with? You've talked about TurboTax Live and QBO Live as well. So.
Yeah, and you want to state your name?
Oh, sure. Karthik Mehta, North Coast Research.
Awesome.
Sorry about that.
Awesome, great. Thank you. In terms of the branding decision, it's TurboTax Live for businesses, but we're just in the beginning of rolling it out. So Varun and his marketing team, along with Laura Balaz, will figure out exactly how to brand it. But it'll be very clear, right? It's from TurboTax Live, and of course the same thing will hold true for QuickBooks Live, because remember, this is about serving the customer and not just only through one platform. The second thing is, when we first came out with our big bet too of connecting people to experts, we had to spend a lot of time educating the market, educating our accountant partners, which they remain very important partners of ours, relative to what is our goal and what are we trying to achieve here. And I would say we're in a place where we hear almost close to zero noise and concern from our accountants, because they've actually seen, one, we're serving underserved needs of small businesses and consumers. Two, we're actually creating a marketplace for them where they can grow their business. As you heard probably Mark talk about in the immersion experience, a lot of CPAs and accountants both have their firm and they're on our platform because it's incremental business. They don't have to do marketing because they just have to be on our platform. And we'll always have to spend time working on ensuring that it's clear that our intent isn't to take them out of business. Our intent is actually create business for them, but also that this is the wave of the future, which is a virtual expert platform where consumers and small businesses can get the help that they need. So it'll always be an area that we'll have to work on. But frankly, other than the first 6 to 8 months of a lot of education and discussion, it is not a top-of-mind issue for accountants these days. Is there any other questions? You all are hungry, right? All right. Well, thank you for your wonderful questions. Thank you for the attendance in the room. Thank you for everyone on the webcast.